The fundamental concepts of bullish and bearish trends came to the cryptocurrency market from the stock market and reflect the tactics of animals attacking their prey in the animal world. If you ever get confused by these terms, then remember that bears wave their paws and stop to fight, while bulls raise their horns and run only forward. Accordingly, crypto bears trade for a fall in the rate, and crypto bulls seek to increase the rate. In turn, a trend is a continuously repeating trend in price changes in the financial market. This is especially true for the cryptocurrency market, which is more than anyone else subject to global events that can radically change it. So every day new technological solutions, transactions appear, startups are launched, options for legislative regulation change, and there are attempts to introduce blockchain into various areas of human life that do not go unnoticed for the crypto market. Therefore, for beginners, it is high time to have time to enter this market while it is not yet fully regulated, since the cryptocurrency is now in a trend and its development is clearly predicted. Bearish trend, time to invest, or unjustified risk? Let's examine together. Welcome to Kripto Ofis channel, I'm Iryna. A bear market or trend is a state of the market when the price of most currency pairs is on the decline. Most traders are set to sell currencies in order to fix profits. Figuratively speaking, a heavy bear pulls the rope with the cryptocurrency down with its pawns, which leads to a fall in the price of the coin. And this is a very stellar time when you can diversify your portfolio and enter the crypto market. So relatively, all investors who currently investing in startups say that now is the time to invest in crypto, and all other tools are much less profitable. Therefore, my recommendation is to take a closer look at cryptocurrencies as a way to expand investment and thus manage risks wisely. How to recognize the transitions to a bullish trend in time? In a bull market, investors are more confident about the future as they expect prices to rise further over time, although trends are actually quite difficult to predict. The key factor influencing the formation of a new bullish trend remains the growing acceptance of Bitcoin and other coins as means of payment, investment assets, the use of blockchain technologies and applications in new areas of business, as well as legislative and tax changes which entail an install market reaction. How to behave as a novice investor? First, if you decide to try yourself in the cryptocurrency market, study the trends, understand the key indicators and consult with professionals. The best way to deal with bear market volatility is to prepare carefully. While others will panic and make rash decisions, you will be able to approach the matter sensibly and be able to conduct a technical analysis of the situation in the market. Or you can contact a consultant and understand the basic terms and market events that he will talk about. Second, diversify asset types and investment strategies. Although most investors perceive cryptocurrencies as a good addition to a portfolio with traditional assets such as stocks and bonds, many of them forget about the needs to diversify these digital assets themselves. Meanwhile, there are many different types of cryptocurrency investments that differ greatly from each other in terms of risks and prospects. Tokens. Collect a set of reliable tokens such as Bitcoin and Ether, and several altcoins with good growth potential. Tokenized assets. Traditional asset classes, real estate for example, are rapidly tokenizing, increasing their liquidity and making them more accessible to retail investors while maintaining the same potential for stable growth, as well as initial placements of tokens. ISOs are the most risky cryptocurrency investment. Study everything carefully and invest only in tokens of companies with a reliable reputation and a clear business model that explains exactly how the project will benefit investors. Be prepared for market volatility. In order to survive in a bear market, you need to be prepared for constant price spikes. Therefore, you should not resort to debt. Do not panic and sometimes just wait. I know it's not easy to sit back when a bear market is storming, but if you have the patience to hold off from a panic sell-off, you can get through this period. We would like to remind you again that what we say is not investment advice, and we recommend you to do your own research. And always remember, your decisions to take depends on your attitude to risk, your expertise in the market and spread of your portfolio, and how comfortable you feel about losing money. You should never trade with more money than you can afford to lose. See you in the next video. Invest in crypto smart and stay cool.